But then going back to how we manage things differently, I'm constantly, landlords will reach out to me and say, "Hey, I'm thinking about this property or this property. Tell me about how that would cash flow or what kind of investment property that would be." And so we run through the numbers. We do a rental analysis and just see, okay, this is how this property would probably perform for you. It's in a good part of town, or not. It's in, it's got the roof's been redone recently. The HVAC system's been redone recently. And then we just go through the numbers and we really look at it as if they were going to invest in that property and how are they going to get the quickest and the best return on investment. That's how I look at properties. I don't look at them as another property to, gather, another rent management fee from, which we do, of course, but I look at it like, is this going to be a good rental property for them as an investor? Because the last thing you want to do is have an entire portfolio of properties that are not performing super well as an investor. You want a good portfolio that's functioning good. And so that's what we try to go through is showing the numbers. And then whenever there is a big maintenance issue or whenever there is, something going on, we say, "Okay, again, this is going to affect your cash flow this way. Do you want to do it now? Do you want to defer a little bit? Do you want to go a cheaper system here or a cheaper repair? Or do you want to do something long term that's going to last a long time?" And that's mostly the direction I push them because if you spend the money up front now, you'll be much happier if it's a quality repair or fix as opposed to just a quick band-aid fix in the moment.
Mhm.
So, I mean, I'm looking at it, like, okay, how can what should your next property look like? Right. This one did really well. Is there another one in the area that you could buy to keep them as close to each other as possible so that we're, managing on economies of scale? Several of our investors have done that where they found another property, a block or two away and they said, let's keep them all together. And that creates more efficiencies for them and for us.
Your venture capital roots are definitely showing here in the mindset of it's not just about kind of keeping the house up and running. It's about these are assets, and we are making
That's right.
having a strategic decision about and whether or not to invest in this asset or the kind of time horizons we want to make an investment into this asset.
That's right. And part of that too, Colin, is this investment going to be a cash flowing investment, which sometimes in the market conditions it's not. But on an equity side, it's really good, right? So if they can eat the cash flow for a year or two until they refinance or something, then the equity side is going to be huge for them. And most investors, it's wise if they have both. They have cash flowing properties and they have equity building properties so that they can, capture both those markets really well.